Good evening, everybody, and welcome to Le Fund International. I am Alexandra Georgiev, and we're going to be together for the following 1 hour and a half. As we can see this Friday, we do see a little bit of rise of the U.S. indices, of course, after a little bit of trade optimism. We're certainly going to talk about it later on the show, but first of all, very quick look at the major headlines. President Donald Trump said that a long-negotiated trade deal with China is potentially very close, following reports that an agreement might not be reached until next year. During her first speech as a president of the ECB, Christine Lagarde highlighted the importance of government fiscal policy and signaled possible change of monetary policy targets. Tesla unveiled its futuristic pickup truck at a promotional event in LA, but when it came to showing off the vehicle's durability, this didn't quite go as planned. Bitcoin slumped to a 6-month low after China's central bank launched a fresh crackdown on cryptocurrencies. Bridgewater has bet more than $1 billion that stock markets around the world will fall by March, according to the Wall Street Journal. As we can see, very interesting major headlines for this Friday evening, but I want to start exactly with the US indices. As we can see so far, we do see a little bit of better trading compared to yesterday. S&P 500 is 3,108 points, or 0.15% in the green territory. On the other side, Dow is almost 0.3% in the green, and Nasdaq Composite pretty flat, 0.05% ahead of the, above the flat line. On the other side, the VIX index slightly lower this evening at the 12.7 level, and the FANGs pretty mixed. As we can see, Facebook, Amazon, and Apple are in the green territory, and on the other side, Netflix and Google are down by a little bit more than 0.1%. I want to show you a very important story that is coming exactly from the Wall Street Journal. As we can see, President Trump called anti-government protests in Hong Kong a complicating factor in his bid for a trade deal with China, and didn't say whether he would sign a bill passed by Congress supporting the protesters. This is the last story relating exactly this Hong Kong bill, which is certainly a hurdle for a possible trade deal between the US and China. We're going to discuss also this story a little bit later on the show, but first of all, I also want to show you the U.S. Treasury. So far, the 10-year is yielding 1.76, the 2-year 1.63, and the 3-month 1.57. On the other side, also a very quick look at the European closure. It's been quite positive trading session here in Europe. As we can see, Stoxx 600 closed almost 0.5% in the green territory. And it's been mostly positive trading session also for the major European bourses, starting with the German DAX, 0.2% in the green, CAC 40 as well, 0.2% in the green. The only not so positive spot across the board is the Italian FTSE MIB, pretty flat trading session, but still almost 0.1% below the flat line, and FTSE 100, 1.22% in the green territory. I shall say that basic resources stocks added 1.8% to lead gains across the boards, that's for sure. A little bit later, we're also going to talk about few important European stocks that have been performing pretty well in the last few weeks and also months. On the other side, of course, the major reason for this positivism here in Europe is undoubtedly the positive trade talks in the last few days and a little bit of trade optimism. One of the most important events here in Europe, certainly today, was the speech of Christine Lagarde. Actually, she said some very important things during her first official speech as the president of the European Central Bank. For instance, she said that the Eurozone needs to create more of its economic growth at home, including via greater public investment if it's to withstand weakness abroad and become more balanced internally. Also, Lagarde did not discuss monetary policy in her first major speech since becoming ECB president at the start of this month, merely saying the central bank would continue to do its part of supporting the economy. Instead, she chose to send a message to Eurozone governments calling on them to strengthen domestic demand after a global trade war brought a decade of export-driven growth, largely led by Germany, to an abrupt end. As we can see also, I want to point out actually for you that she also signaled possible change of the ECB monetary policy targets. Probably she was referring to the inflation, because so far 2% of target is almost sounds incredible for the European, of course, for the Eurozone. On the other side, I wanted to point out that today we saw the IHS Markit / Eurozone PMI And in November, it slid to 50.3 from 50.6 in October. So once again, decline this time regarding the PMI. But in order to delve deeper into this topic, let me bring to the show my first guest this evening, Jean Ergas, Chief Economist, Tigris Financial Partners. Good evening, Jean, and thank you so much for joining us.
Good evening. It's always a pleasure. Always a great honor. Thank you.
Jean, I would like to start exactly with the Christine Lagarde statement, because it was very beautiful. I've heard all of it in the morning, of course. She's been very, very precise and very good communicator, I shall say this. First of all, she mentioned that there might be changes in the ECB monetary policy targets. Do you think she's referring to the inflation?
Maybe she's referring to the inflation. She may be also referring to, for example, not just monetary targets in terms of inflation, because I think that is what they work on. Remember, their mandate is price stability. Their mandate is not the dual mandate of the Fed. So it could very well be the inflation. And it could also well be, in my view, a general statement on what monetary policy is actually going to be going forward. I mean, let's put it frankly, I think that this is a conservative approach which she is going to take. She is going to try to follow and continue to follow, rather, the Draghi line. She is not a hardliner. Her struggle is going to be twofold. Her struggle is going to be, one, the hardliners within the ECB who say no more easing, we are at the bottom, and even if we're not at the bottom, more easing is not going to do any good. And her second struggle is going to be to convincing the governments of Eurozone, those who actually have the money, and there are very few of them who can actually do the spending, to start spending. I think what is very interesting for a governor of a central bank is that she did not talk about the work of the central banks as being the solution, but saw, in fact, a solution in a cooperation or a prodding on of fiscal policy by governments, which hitherto have either been unable for budgetary reasons or unwilling, because it seems to run contrary to their inclination or their economic policy, to actually pitch in. I mean, it's extremely important what she's saying. She's also saying things which are interesting, which I agree with, we've been saying a long time, that the shift in the emerging markets is structural, it is not cyclical. Stop Europe looking to export growth. We have had a free ride in Europe because we've become a type of Singapore. We've done a lot of exporting, but this exporting was not cyclical, this exporting was structural. Look at the German example. They had the boom in the emerging markets due to what? Industrialization and selling of precision machinery. They've had the first wave. This is over. We must now think of something else. The real problem in the Eurozone is not the export. The real problem in the Eurozone is the domestic market, which remains very, very weak. Pricing power remains absolutely abysmal for small and medium-sized firms, and we must end this segmentation between an export sector, which has done relatively well, and a domestic sector, smaller companies in some cases, who do not have access to pricing power abroad, who have done very badly, and who also employ a lot of people. But I really think the point is also that she has gone beyond the traditional, I would say, mandate of the central bank, which is the monetary policy, and is actually talking about growth, talking about creating employment. This is not the mandate of the central bank. So we have a Lagarde who wants to straddle both worlds, central banking and fiscal policy. Will she succeed? I hope she does, but I think she's absolutely right. There is absolutely no way forward without Germany spending money. This is what it comes down to. Either Germany starts spending money, or the Eurozone will continue to bumble along the bottom. Not an enviable prospect.
On the other side, in its September package, I'm talking about the ECB, of course, the easing measures, which included a 10 basis points of a key interest rate cut. And not only, they also introduced the two-tier system in order to, of course, to help the banks. But today, after Christine Lagarde's speech, we've heard the Commerzbank CEO Martin Zilke, who was very explicit and very vocal regarding the fact that this two-tier system introduced by the ECB earlier is not helping at all the European banking system. What is your personal opinion, and do you think it's enough as a measure?
Well, look, I don't think it's enough as a measure, because even if we have a two-tier system which should in some way mitigate the impact of negative rates on the banking system, is what is the problem with the banking system? The banking system does not make a lot of money when rates are very low. It's simple. It's also more a function of the curve, of the actual curve, the difference between short-term rates and long-term rates. This is not going to be the solution. The real solution is getting the economy moving. The problem of the banks is, yes, in one part has been being hit by this environment. And the second point, of course, is that the banks do well when the economy does well. Insisting on simply a monetary policy to alleviate, let's say, the symptom is not attacking the cause. The cause is, in fact, that the banks in Europe have come out. First, were hit very badly by the banking crisis. Two, have had to recapitalize to, let's put it this way, make good the excesses of the banking crisis and its damage, and also now are facing stringent capital requirements under new regulations. So they're trying to run, in several different directions at the same time in an economic environment which is not conducive to the building up of profits and capital reserves. So this is the real problem. We can fool around as much as we want between sort of 2 tiers, 3 tiers, 4 tiers. The real point is, A, we have not yet worked off the excesses of the crisis. There's still bad loans out there. B, there are still many companies which are paying, but which are paying because you have consolidated short-term debt into long-term debt, and therefore, if you hadn't done this, they would be technically insolvent. And 3, we need an economic recovery because banking has not been able to benefit from a cyclical upswing like some other sectors have done, even if it meant going from recession to 1% growth.
And do you think this low interest rates environment is going to last even longer here in Europe, or you think there is, how can I say, bright spot in the tunnel?
Look, it's not a question of is there light. You're asking an excellent question, Alexandra. How long is this going to last? I don't know. I think that in fact we are now to a low interest rate environment for some time. The question is what is low and what is high. Now we think it is a success in some country and a great sign of economic prowess and strength when the 10-year bond of that country goes above zero. Now, I'm 64 years old. I saw, for example, real interest rates, i.e. the 10-year yield minus the CPI in certain countries, which was 10, 11% or 8%, and companies were booming, companies were making money. So there's something wrong here. The minimum maximum points have been redefined. What we're basically doing is we're going from very sluggish growth, quasi-recession, to recession. These are the two states. We have practically abolished the other states which are intrinsic to the traditional understanding of the business cycle. Yes, I think it will stay low. I don't see why they should erupt. I don't see very strong loan demand, and I don't certainly not see a very strong economy. So what's going to prop up the rates? People want to borrow money because they see an interesting way of employing it and earning more than what they're paying. And B, it could be that there could be an upsurge in inflation, which is brought on by, for example, imports or sudden explosion in fuel prices. I do not see these two on the horizon. What there could be, and I think is another point, is that there could be a shift in inflationary expectations. But even then, what are they going to shift to? Basically from 0 to 1%, we're still going to be in low interest rates. So low interest rates, as compared to what traditionally were interest rates in the European Union when I grew up, or even in moments pre the oil crisis, are still going to remain abnormally low. I think this is going to be a very big problem for the banks. I think it's going to be a very big problem for the insurance companies. It's a very big problem for the annuity writers who are facing an increasingly hostile environment in terms of the yield gap between what they have promised to pay the buyers of annuities and what they can earn. And what is the solution? You go riskier and riskier, at which point you create bubbles, you create collapses, and you create the need for further central bank intervention. So I think it's a tough scene out there. I think we should certainly be looking at the banking financial complex as one, and not simply at the banks, because I think that remains the Achilles heel of the Eurozone.
And can we expect some important announcements during the December meeting from the ECB, or you don't think there is lots of space for maneuver?
Look, they're doing a lot. These people have not sat on their hands. They've been pretty active now. Rates are low, and they're going to start buying bonds again. They're going to really get moving now. Let's take on the buying of bonds. What will it do? I'm not sure. I think, as long as they don't do anything rash, such as start talking about raising rates or seeing green shoots where I think there are none, quite frankly, then I think we're going to be okay. I think the important part is not what they say, but what they don't say. And I think that's very important. They don't say, we, have decided that, there's been enough easing and stop with this crazy policy and Draghi is gone, thank God. This is based on how many feel about him. I liked him. As many feel about him. I think we're okay. I think that what Lagarde is saying is whatever we do, basically, it's not that we're a dummy variable, but we can't do it on our own. The real thrust in Europe is going to come from governments now. It's that simple. It's like a relay race. The central banks have done the first part of the race, and now they're going to hand the baton to the fiscal policy, which is the central state apparatus. And if the state is not there to pick up the baton, I can assure you it's going to be very rough out there.
On the other side, let's talk about another very hot topic, or at least here in Europe. Certainly, it's the United Kingdom and the situation
Sure.
over there, because we're going toward an election on 12th of December. On the other side, I just wanted to point out for our viewers that Goldman Sachs' favorite pick for 2020 in terms of 2020, yes, in terms of currencies is definitely the sterling. That was major surprise, or at least for me. I just wanted to talk about the sterling, point out that so far sterling against the dollar is 1.2826. It's down by almost 0.7%, but it's not because of the sterling. It's because today we do see a stronger dollar, and as we can see, the dollar index is at 98.27. It's up by 0.3%. On the other side, I mean, first of all, let me ask you a very brief comment on this statement of Goldman Sachs. Do you agree? And would the sterling be your pick for 2020 in terms of currencies?
No, it's not going to be my pick because I think it can fall further. I mean, from here, quite frankly, I think it can fall further even with a stable dollar. I just looked at the business sentiment data today in the UK. It's absolutely terrible. I mean, quite frankly, we're in a contraction mode. I mean, PMIs in the UK are certainly not pleasant to look at. People say, oh, this is because of the Brexit uncertainty. No, I think it's also because of the fact that the global economy is slowing, and it's a cyclical factor. So you have two factors hitting the UK, the structural, which is the Brexit, and cyclical. I think one famous philosopher, Doane, said, no man, no person is an island. Well, I mean, not for nothing was this chap, British. So I think that we really have to re-dimension this whole sterling story. What do the Soloni, the great thinkers say? They say, well, buy options, and it may do 4%. Look, I think that's a perfectly tenable point of view, but what you're gambling on is not a recovery in the currency. You're gambling on the removal of one element of uncertainty, and then it may well peak. Because basically the way I look at it is this. First, sterling in real terms compared to its historical average against the US dollar will remain very low. Okay, 136, 135, whatever the target rate is still very low compared to where sterling has been over the years against the US dollar. Secondly, I do not believe that any government in the UK is going to relish the thought of having a strong currency. Because what they want to do now is they want to start exporting and they want to sign new free trade agreements. The last thing you want is a strong currency. So I think that certainly government policy will not be favorable to it. And that quite frankly, I mean, we do not see a domestic economy in the UK which is going to go great guns immediately. So I think this is really a very interesting point. I look at it as a trading strategy. I certainly don't look at it as something which is going to be based on extremely strong fundamentals. And therefore, I think it's a trade. It is not a policy.
All right, let's talk now about the UK elections, because from one side we do have Boris Johnson, the Conservative leader. On the other side we have Jeremy Corbyn. Only a few days ago we did hear their debate. Actually, it was very interesting. And it was based on, of course, focus on the Brexit and not only healthcare and several other important topics for the United Kingdom. I shall say that Corbyn is targeting once again, like pretty similar to Elizabeth Warren's tactics, or targeting the ultra-rich people. He wants to tax the ultra-rich people. On the other side, Boris Johnson wants to introduce a 3% tax for foreigners who want to buy British property, and of course he promised to get out from the EU by 31st of January. He had done that kind of promises even previously, as we very well know, and it was the 31st of October, the prior deadline for the Brexit. In your opinion, I mean, what do you think about this? How can I say, tactics coming from Jeremy Corbyn, and do you think that that kind of political proposals might have any chance against the Conservatives?
Well, I think the Conservatives will have a chance. I mean, remember that the Labour Party, whilst it is not in power, is far from a spent force. I mean, they have, their seats, and believe me, they are numerous. This party is not extinct, so they still can gather a tremendous amount of support. Yes, I think it has appeal. I think Corbyn has another appeal, which is maybe transcending the whole tax issue, beat up the rich, which is, if you vote for us, look, we may have a shot at a second referendum to stay in the EU. Now, this is a very, very important point, because a lot of people in the UK are getting fed up with the idea of leaving the EU. They're starting to realize this probably is a large mistake. So I think basically Corbyn is doing this. Let's put it this way. I'm going to make a comparison brief between Johnson and Corbyn. Johnson wants a soft hard exit, which is what he wants. He wants a treaty, he wants an agreement, but he also wants the UK to separate from the EU. Let us put it this way. And they're saying that they're not going to be separated at home, they're going to be divorced. This is very different. What does Corbyn want? If this chap wants a basically de facto hard exit, Corbyn wants hard socialism. So what we're seeing now in the UK is a reversal, I think, a reverting to basically what? Two forms of government that we have not seen for some time. The ultra-liberal welfare state, which breaks with it, or use associations, breaks association, which is an integral part, and reverting to 1970s England, if not before. Remember, Corbyn wants to actually not only have a greater role of the state, he wants the state to take over industries. He wants this ultra taxation of the rich. There's a lot of things that are going on here. And so he says, but we'll also have growth. We'll have a more equal society. And Johnson says, well, the solution to the more equal society is growth. In the middle of this, we have the Liberal Democrats who say the solution to the more unequal society is that we are going to make a lot of money because we will not leave the EU. What is common to all three is that all three are going to increase public spending. What is common to all three is you have to scratch your head if you've done fifth grade arithmetic and try to figure out where they're going to get the money. So there's a lot of promises out there, but I believe that Corbyn does have an appeal. Corbyn, remember, is actually standing up and saying there are the ultra-rich, you are a nurse living in London, you cannot afford housing, you cannot afford to take the tube, you have to walk everywhere. There has been a great deterioration in the condition of many working people since I was living there. Certain things were affordable, certain things are now unaffordable. And he's going to get up and say, look, I'm going to do something about it. I think the solution, is going to be very dramatic, quite frankly, on this man's case. But remember, one is reverting to a world which most people have never seen, thank God for them, but I did. And the other one is promising something which I think is pie in the sky. So I think it's going to be rough in the UK. And we're going to see a lot of social inequality increase if Johnson gets in, because Johnson basically wants to turn the UK into a deregulated, giant, macro, duty-free shop at Amsterdam airport and hopes that everybody shows up. If they don't show up, it's going to be very scary.
And so you say that the proposals of Jeremy Corbyn are not plausible and you don't think he might win over Boris Johnson. Is this what you're saying?
Well, I'm saying I don't think he's going to win, but I think what could actually happen is he's going to get a lot more votes than people think. And I think there could also be a hung parliament where you have the Conservatives as the largest party, but not having an absolute majority. And then we're going to have to start looking for coalition partners. I'm not saying this is the most likely event, but it's certainly possible. In 2017, there was a big surprise, and this has caused tremendous problems to the Conservatives. And I think the Conservatives, if they were smart, should not underestimate the amount of social frustration, which they do not seem to be addressing. They seem to be a party that's out of touch. Corbyn is proposing solutions out of 19th century Marxism that have failed and failed and failed again. But when people are desperate, they may do desperate things and cause an impasse. That's all I'm saying. I'm saying do not underestimate it, because the frustration is very, very high here.
Absolutely, I agree with you. Jean, we have exactly, I believe, 2 minutes. I want to discuss very quickly the retail sector in the United States, because we did see very mixed results after the Q3 earnings. And of course, very mixed performance of the single stocks on the other side. I just want to have a very quick recap for our viewers. So far, Walmart is down by 0.3%, Target on the other side 0.9%, and Macy's is up by almost 4%, 3.75%, despite the fact that they cut their sales outlook for 2019 exactly yesterday. Jean, what is your comment?
My comment is very simple. I think, obviously, the American consumer is not dead, but the American consumer is going to become very choosy going into the Christmas season and the holiday season. And I think that's a big sign. I think people, yes, their wages went up for some, they got a job, but they're not a big free spending mood. There is $13 trillion of consumer debt in the U.S. There is uncertainty as to economic prospects. And I think people are going to be careful how they spend their money. I don't think there's going to be a collapse, but I think that the Christmas shopping season, the holiday shopping season could be disappointing for some, and I think there's going to be discrepancies across the various retailers. And it's very important. I obviously cannot give recommendations or make these recommendations for any company, but I think that those, for example, who were able to actually sort of integrate the online and the store and reduce costs are actually trying to compensate for a lack of pricing power and shall do relatively well. But, if those who don't, well, that's too bad for them. It's going to be, that is the key. The key, this is an industry which is shifting from trying to generate some sort of pricing power based on a strong cycle to look into cost cuts constantly, and there's a limit.
All right, thank you very much, John Ergas, Chief Economist, Tigers
Very well.
Financial Partners. Thank you for joining us and have a great weekend.
Thank you very much. It's always a pleasure, always an honor. Thank you.
Well, I want to give you a hint. What are we going to talk about in the second part of the show? For instance, Tesla unveiled its futuristic pickup truck at a promotional event in LA, but when it came to showing off the vehicle's durability, things didn't quite go as planned, and we're going to discuss it, and we are also going to show you everything in the second part of the show. So stay with us. We're going to be back after the break. Good Friday evening, everybody, and welcome back to Lefoni International. So far, U.S. indices are trading higher. As you can see, S&P 500 is 0.2% in the green. Dow as well, a little bit more than 0.3% in the green territory. And Nasdaq Composite is recovering the losses, 0.12% above the flat line. So far, 8,516 points. As we can see, the VIX index is still at the 12.6 level. Of course, a little bit of clashes actually between the U.S. and China once again, but China said a little bit earlier today that they are looking forward to go towards a deal, not a no deal. On the other side, I just wanted to show you one of the major stories of the Wall Street Journal, and it's certainly the fact that President Trump called anti-government protests in Hong Kong a complicating factor in his bid for a trade deal with China, and didn't say whether he would sign a bill passed by Congress supporting the protesters. Certainly that have been a major topic, that's for sure, no doubt about it. On the other side, I want to show you a particular stock. It's a major headline today, and certainly I'm talking about Tesla, which is sinking by almost 6%, as we can see, 5.77 so far. And let's talk about Tesla, because Tesla unveiled its futuristic pickup truck at a promotional event in LA. But when it came to showing off the vehicle's durability, things didn't quite go as planned. CEO Elon Musk claimed the car was bulletproof against 9mm handgun, but when he got Tesla's chief designer to throw a metal ball at one of its armored windows, audible surprise could be heard as the glass smashed twice. Probably you would see a little bit later from our images. Actually, design lead Franz von Volkswagen gave it another shot, this time with another window. Again, the ball cracked the glass pretty badly, as you can see from the images. This was after the executive had already taken a sledgehammer to the side of the truck, striking it multiple times without leaving a scratch. We threw wrenches, we threw everything, even literally the kitchen sink at the glass, and it didn't break. For some weird reason, it broke now, Musk said, drawing loss, of course. I don't know why. We will fix it in post. Those are the images, as you can see very well. Of course, I mean, that certainly was pretty funny thing. But in order to delve deeper, let me bring to the show my next guest this evening, Matthew Malley, Managing Director of Miller Tabak. Good evening, Matt, and thank you for joining us.
It's great to be here, Alex. Thank you.
Matt, what is your comment on this major story? I mean, it's very funny. I don't know how Elon Musk always manages to surprise us.
Yeah, there are even some people starting to question whether he did it on purpose. And to be honest with you, I'm questioning the same thing. I don't know for sure. There's no way to know for sure, but it's certainly creating more headlines than it otherwise would have. And it's certain. I don't think it has anything to do with the stock going down. It is down a lot today, but we also know that it's had a huge rally in the last 2 months. So the fact that it's giving up 6% is actually not as big a deal as it would normally be for a stock if it hadn't, if it had just been, kind of trading along like as usual. But this can be a very volatile stock, as we all know, and it's rallied very, very strongly in the last few months, and it was up from below $200 just a few months ago. So the fact that it's giving back today, I think I don't think Elon Musk is too disappointed that the stock is down, considering where it was way off its lows for the year, and he's getting a lot of free advertising out of this incident, and so I think he's got a smile on his face today, to be honest with you.
No, certainly he had a smile on his face, but I mean, it's very, the events that he makes are, there is always something wrong, I mean, always. There isn't even a case where everything went in the right way, let's call it like that.
That's for sure.
So you don't think that's the reason that the stock is sinking today? It's been extremely volatile.
I think it's an excuse for the stock to go down. I mean, it's like I said, whenever I was looking at the charts on the stock earlier today, and the RSI, which is the weekly RSI, relative strength index, is as overbought as it's the second most overbought it's ever been, and very close to the most overbought it's ever been. And on its daily relative strength index chart. The stock is has been actually very overbought for a long time. I mean, let's say at the beginning, I mean, just a month and a half ago, 6 weeks ago, the stock was down, down near about $220. So it's rallied 60% over a very short period of time. So the fact that it's retraced a small amount of that, I mean, it hasn't even retraced 25% of that rally. So it's not I think it's a much more of a technical situation than it is a real reaction to this news.
On the other side, would you buy that kind of pickup?
I'm sorry?
I was wondering, would you buy that kind of pickup?
Oh, well, I think the stock, to be honest with you, is so overbought that I think the stock's probably is going to be... I'm sorry, well, the pickup truck in Virginia, I would not buy one at all, and to be honest with you, and I think it's going to be a tough sell. I mean, there's some people thinking that it's going to be a truck that's be bought by the next generation of young people, but, the type of people, so one person said that the people that are going to buy this truck are the ones playing video games right now, and I'm like, that's fine, but most of those people don't end up buying video games. I'm sorry, don't end up buying pickup trucks. It's the ones that work on farms or work in construction, and they like their Ford pickups and their Dodge pickup trucks a lot better. So I don't see this as something that's going to be where they're going to make a lot of money, but it helps them make more news, and it keeps them in the news, and that's really what they're relying on. As for buying the stock, I think it's still overbought. Probably has to come back a little bit more before you want to get too aggressive on the buy side.
On the other side, Matt, this has been definitely the week of the retail sector because we saw a little bit of difficulties over there after the Q3 earnings reports. And I shall say that today it's mostly in the red territory except Macy's that yesterday reported a little bit of disappointing results, first of all, and secondly, the outlook for the 2019 sales was not really positive, or at least what we were expecting compared to the previous quarter expectations. But today Macy's is up by almost 4%, pretty positive trading session. On the other side, the rest of the major stocks are down. For instance, Walmart 0.3%, also Home Depot is down by 0.2%, Kohl Corporation is down by 0.5%, and Target down by 1%. First of all, what is your comment of the retail sector earnings? And secondly, we're going to talk about the stocks.
Yeah, it's been somewhat mixed. I mean, we've had some good ones as you've mentioned. Lowe's being one, but then the big competitor of Lowe's is Home Depot, and that stock had disappointing numbers, at least disappointing guidance, and the stock got hit. In the same thing, what we've seen. Target with some good numbers and a nice rally, but as you mentioned, Kohl stores, and until today, Macy's, of course, has been a disaster this year. It's the worst stock in the Dow Jones Industrial Average. So for the whole thing, it's rather mixed. And if you also look, of course, at Amazon, but of course, which is very important to the consumer, that stock's been doing nothing for a while. Now, I do realize part of that is because they have really ramped up their costs in an investment way. So maybe that's not the best indicator for the consumer. But my point is that people are starting, they're a little nervous about the consumer, and they're just a few cracks trying to show, and they're not deep cracks by any stretch of the imagination, but the consumer has been such an important backstop for the U.S. economy for a long time now, and when you start to see some of these consumer confidence numbers, they beat the number today. University of Michigan was slightly better, but still not all that great, and we see that the consumer debt numbers have come down to their, kind of the low end of the range they've been in for the last 7 or 8 years. So people are borrowing less. It means they're going to spend less. So again, I don't want to make a big deal out of this, but I just say that there's some minor cracks, and I think people are a little cautious because they want to see how the holiday sales go after Thanksgiving in the U.S. And if they do go well, I think you'll see some of these retail stocks that bounce back much better. But people are taking a wait-and-see attitude right now.
Exactly. So you don't think it's a good moment for the retail sector, and you wouldn't, how can I say, look for stocks over there? I'm
not. Yeah, I'm cautious. on the group, and I definitely think there's some other areas that are starting to that are picking up that look much better, and so it's just I'm not saying you should people I think on these individual stocks have been cautious on them, obviously because of the what has happened with the internet and shopping, online shopping. So they're probably not loaded to the gills in the stock anyway, in these stocks anyway. And I wouldn't jump on board until we got a better idea that the Christmas holiday is going to do better. Especially when you got other groups that are starting to do healthcare, and even within the healthcare sector, you're seeing the biotech stocks bouncing back nicely. So there's certainly some other areas I think you're taking a little less risk in jumping in a more aggressive manner.
I want to talk about cryptocurrencies and in particular Bitcoin because it's pretty negative period for the cryptocurrency. I want to show to our viewers so far Bitcoin is at $7,167, which is down by almost 6% in particular today. Actually, the timing is very important for this Bitcoin slump. Why? Because also the People's Bank of China launched a fresh crackdown on cryptocurrencies, warning of the risk entailed in issuing or trading them. The People's Bank of China's Shanghai headquarters said it would tackle growing cases of illegality involving virtual currencies. It also cautioned investors not to confuse crypto with blockchain technology, the digital ledger that underpins many cryptocurrencies such as Bitcoins. Of course, the move came a day after regulators in Shenzhen launched a similar campaign, and same as the People's Bank of China prepares to launch its own digital currency. First of all, do you think that's the main reason? And secondly, do you think that the Bitcoin is going to go even lower, considering the fact that the Chinese market is very important from the cryptocurrency? And as I was just saying, the People's Bank of China is already preparing for the launching of their own cryptocurrency.
Yes, this is definitely the reason. I mean, it's such a volatile trader. As we all know. I mean, it's kind of funny because the Bitcoin is getting quite oversold on a technical basis. And the last time I got this oversold, it bounced 34% in just 2 days. So you need to be careful trading this thing. Needless to say, that's an understatement. But the Bitcoin, again, on a technical basis, it's dropping below its 200-day moving average, which provided incredibly good support for the cryptocurrency back in October, and it's also making a lower low. So on a technical basis, even though you could continue to see some sharp swings, there's no question that the chart does not look very good. But as the other on the fundamental side of things, you look at what's going on with, well, as you mentioned, with China. China, their crypto, they've been talking positively on cryptocurrency or on as you mentioned, blockchain, but believe me, they want to have control over what that is. They don't want Bitcoin or something that they don't have any control over to be the biggest player. I think it's kind of there are two sides to this situation. I think there are some people say that Bitcoin and the blockchain is the future, and Bitcoin's going to go along with it. Then you have the other people who also say that the blockchain technology is definitely the future, but they say that Bitcoin is not necessarily part of that future. I think what China is telling us now is that Bitcoin may not be part of that future. That doesn't mean that it's going to go away or it's going to go to zero, but I do think it's going to be hard for this one to really rally in a significant way. Certainly not the way it did when it got above 12,000 at the beginning of this year, or in June of this year, or up at 18,000 at its all-time highs. And it's going to be a while before it gets anywhere near there. And I think no matter what the Chinese are doing, they will take their time. They want to be at the head of it, but they're not going to rush into it. So it's one it's so volatile. I think it's one to stay away from right now.
Yeah, it's extremely volatile in the last few months, and you've just showcased two types of people. Which one would you pick in your opinion? I mean, which one do you support? Which kind of opinion do you support?
I'm more on the blockchain and that Bitcoin won't work as well. I just believe that all governments, not just China. And just one thing I've said in the past, and one thing I totally agree with it, and I've heard other people say it as well, is that one of the few things that governments have that gives them their legitimacy, that gives them their power, is the control of their currency. And we saw what happened when Facebook came out with their Libra product, and the government came down on them hard because they don't want to lose control of their currency. They don't, and the U.S. is not alone. China's not alone. European countries saying the same thing. They're going to fight this tooth and nail over a long period of time, and I think that Bitcoin is going to suffer over the long. I mean, it's going to suffer because of that. That doesn't mean it's going to, going to disappear. Doesn't mean it won't work over a very long period of time. But I think those who think that it'll be by early in the next decade that it'll be the currency of choice are going to be very frustrated.
Matt, I completely agree with you with the fact that there has been a lot of scrutiny around Bitcoin and all cryptocurrencies as a whole, and in particular the Libra project, because governments and also central banks want to have control over their own currencies and each and every currency that is circulating all around. But do you think that politics in this case will be able, how can I say, to reprieve these developments of the cryptocurrencies and also different projects like the Libra project? Because certainly after Facebook, they're not going to be the only one that would come up with that kind of idea and that are going to try to do that kind of, let's call it global currency. There are going to be other probably tech giants that also would want to try this in the future. And do you think that governments and politics and also central banks are going to be able to reprieve this development in the long term?
Over the very long term, it probably won't be able to. But I think, I think easily over the next decade, it's going to be something that's going to be very, very hard for these companies to do. And one of the reasons I believe this is that the cryptocurrency, like it is for Facebook, this is not something that is a core part of their business. And they do have a core parts of their businesses that these governments, like the U.S., can and have attacked when these issues come up on the cryptocurrency. So, in other words, you can have the U.S. government or other governments kind of behind the scenes go to these companies and say, listen, you keep pushing this thing, we're going to nail you on where you really make your money, and we're going to regulate you up, in a major way. So if you want to avoid being regulated on the stuff that really makes you money, you need to stop this cryptocurrency thing, and therefore that is it's just going to be follow the money, and these companies I think will not push as hard as the scenario you mentioned. For that reason, the governments have other powers that they can use to stymie these efforts.
Matt, let me ask you one last question. What do you think about this major story of the Wall Street Journal? It's actually the opening, of course, regarding Bridgewater, the major hedge fund. Actually, Bridgewater has bet more than $1 billion that stock market around the world will fall by March. That's the story according to the Wall Street Journal. And actually it's made up of put options, which are contracts that give investors the right to sell stocks at a specific price, known as a strike, by a certain date. They allow investors to shell out a relatively small amount of cash to hedge a larger portfolio or make a directional wager. The options expire in March and currently represent one of the largest bearish bets against the market. I was just wondering, do you agree with Bridgewater?
Well, one of the things that I do know that Ray Dalio, who's the founder of Bridgewater, has come out just recently, and I don't know, within the last hour, anyways, when I read it, and he's been saying that they do not have a major net bet against the market, and so he's not going to tell us exactly why those trades were made. They were made, but it sounds like it's more of a hedge than a directional bet. At the same time, though, even when people put on hedges, they must have some sort of a fear that even if they're hedging existing positions, there must be some sort of a fear that we could have some problems. And And again, I don't disagree with that simply because I think the stock market is overbought, and it's had this great run in the last few months since the October. I'm sorry, well, it's obviously had a great run all year long, but it's also had almost a straight line move since August, the August lows, and so the odds that we'll get some sort of a hiccup along the way or a correction between now and March, it's pretty high. But I don't think this is something that's a systemic issue where they're worried that suddenly something in the system is going to cause a major crash in the market or anything like that. So I think it's going to be it's more of a hedge because the market's overbought and could see a correction of 10% or more, but not something that they're trying to making a directional bet that they see something out there that's a major problem that suddenly is going to kill the markets.
All right, Matthew Manley, Managing Director at Miller Tabak, thank you for joining us and have a great weekend, Matt.
You too, Alex. Have a great one.
Well, we're heading for a very short commercial break, but stick around, guys, because the rest and the last of our segments is going to be chart analysis, and there is a lot to talk about. Good Friday evening, everybody, and welcome back to Lefoni International. This is our third and last segment for this Friday. It's chart analysis. It's time for really, really interesting things. First of all, I want to have a very quick look at the US indices so far. A little bit of better trading session compared to what we saw in the last 2 days. On Wall Street, S&P 500 is 0.2% in the green. Dow is a little bit more than 0.3% in the green, and Nasdaq Composite a little bit flat, but still 0.08 above the flat line. Before we go ahead with the chart analysis, very quick look at the major headlines. President Trump said that a long negotiated trade deal with China is potentially very close, following reports that an agreement might not be reached until next year. During first speeches, the president of the ECB, Christine Lagarde, highlighted the importance of government fiscal policy and signaled possible change of monetary policy targets. Tesla unveiled its futuristic pickup truck at a promotional event in LA, but when it came to showing off the vehicle's durability, things didn't quite go as planned. Bitcoin slumped to a 6-month low after China's central bank launched a fresh crackdown on cryptocurrencies, warning of the risk entailed in issuing or trading them. Bridgewater has bet more than $1 billion that stock market around the world will fall by March, according to the Wall Street Journal. As we can see, major stories for this Friday evening. It's been quite interesting day on Wall Street, and it is so far. But before we go ahead, let me bring to the show my next guest this evening, Stefano Borgiacchi, Director SIM. Good evening, Stefano, and thank you for joining us.
Good evening, Alexandra. Thank you for having me.
Well, certainly no doubt about the fact that indices are trading higher this evening is that we've heard a little bit of positive news regarding trade between the US and China. Also, Trump said, actually, I should point out for our viewers that he said that's one of the major stories of the Wall Street Journal. He actually called anti-government protests in Hong Kong a complicating factor in his bid for a trade deal with China, and didn't say whether he would sign a bill passed by Congress supporting the protests. Certainly, that was a thing that made markets trade lower in the last 2 days. But what can we expect from now on?
Look, the markets are stronger than ever because in these 2 days, as you said, they retraced a little, they went a little down, but they recovered in a very quick way. So they are still showing the strength that we saw since in the last 2 months. And I believe that these trends will go on, as you know, until the end of the year. So there has been some small negative signs, but the market is stronger than ever, even if there are no fundamental for this, because there are a lot of crisis fronts like the China one, the trade war, and the Hong Kong stuff, and a lot more. But again, the markets still are going up. They seem to have a one way only, and I believe that this will continue until the end of the year. The real question is, I want to see what will happen after the Christmas holidays, starting in January, when the market will have to deal with the reality. Okay, we will have to do a reality check. So for the moment, everything is fine. We see the market stronger than ever. As you said, today there's been a little recovery also in the US market after the bad news on the trade wars that in the last few days triggered the little downfall that we had. But again, markets are stronger than ever, and I firmly believe that this will go on until the end of 2019.
On the other side, let's get to the single stocks. In particular, I want to start with Tesla. It's been quite a wild ride yesterday evening for Tesla because actually it unveiled its futuristic pickup truck at a promotional event in LA. But when it came to showing off the vehicle's durability, things didn't quite go as planned because we saw a little bit the small fail of the test of the demonstration. Do you think that's the reason for this slowdown today, because it's down by almost 6% so far, or you think there are different reasons?
Okay, I believe that the market didn't understand what happened yesterday because it was like a show, okay? It didn't go well, of course, as you say, they crashed the window, but this was not a failure because the model is still a work in progress. They're gonna sell it in 2021, and they have all the time in the world to fix it. The real thing is that the model is a real, as you said, futuristic example of what the car motive and the car dealers we will have to deal in the future. So again, this is a sign of strength for Tesla. And if you see also from this stock, it is true that the market went down today almost 6% now, but it didn't went down so much. It just closed the gap that we had since a few days ago, and is still holding well above the 330 mark. So the reality is that the stocks is still strong and stronger than ever, even after this little downfall that we had today. Again, I firmly believe that the market didn't get what happened yesterday, because the Windows break was just, again, a live demonstration as the news, as you can see, say. But the real news is that the Tesla stock has risen, as you see here, 40% in 1 month, okay? So the 5% retracement that we are seeing today is really nothing. And the new model that they presented yesterday is a real advance in technology, and they're gonna sell it in 2021. So we have 2 years to fix everything and to fix the window, of course, and to deliver a wonderful product. As you know, I strongly believe in Tesla, and I believe that we're gonna see higher levels for these stocks.
No, I absolutely know that you strongly believe in Tesla. You're a Tesla lover, that's for sure. But do you think actually that yesterday's demonstration is the reason for this, how can I say, downturn today, or you think there are technical reasons?
No. It's a reason for the downturn today, but the reality is that the market didn't get what happened yesterday, okay? So it's more an emotive stuff. I believe something emotional more than something real. Okay, this is what I believe.
All right, okay. On the other side, certainly one of the major stories this week has been the retail sector, because we saw lots of earnings from different giants, and they were pretty mixed because few of them reported better results, other not so much, and actually not really positive forward guidance for the upcoming quarter at least, or also year. First of all, your personal opinion on the retail sector as a whole, and secondly, for instance, I want to start with Macy's, which yesterday was sinking after its performance, but today it's up by almost 5%.
Yeah, of course. This is the reason why I believe the retail sector is not as bad as it seems. It is true that, like we see in the news here, that the retail sector fall like 3% as a whole during this week. But then the reality is that the retail sector is innovating a lot. We have just to see the Walmart case, for instance, and they are holding very well against the e-commerce, because they are finding peculiarities and stuff that people still want to buy offline. And this is the real competitive advantage that I see for the retail sector. Of course, they are going under a strong modernization of everything, of their services, the reason why people goes to the shop, and it depends a lot also on the kind of goods and stuff that we want to buy offline and online. Think about the fashion environment. It is true that we can buy our clothes online, but it's not convenient. And there is an integration where, as you know, you can buy something online, you can deliver it at the offline shop, then you can try it on, you can change it, and this is the real advantage that I see for the retail sector in the future. As you said, Macy's, that is not one of the most innovative companies in the moment. In my opinion, the most innovative company at the moment of the retail sector is Walmart. Today went up 5%. So in fact, the reality is that the retail sector as a whole is going very well, and is holding very well by innovating on a technology side, and it's not going to disappear. This is my opinion.
And exactly, I was showing Walmart to our viewers. You said it's going up, but today it's actually 0.3% lower right now. If you had to pick between Macy's and Walmart, which one would you choose?
No, I would go with Walmart all the way, because Walmart is really innovating and is really holding very well against Amazon. Because as you know, the real problem for the whole retail sector is Amazon, and Walmart is innovating and doing very good stuff, and we're going to see a great growth of this company in the future. They had their share of problems, but now they are solving them, and I see a bright future for Walmart.
On the other side, Stefano, stock that I want to discuss is certainly FCA. It's been quite a difficult week, actually, for the stock because, of course, General Motors accused FCA of labor racketeering. And I mean, it's been a little bit of a difficult moment for the stock, despite the fact that, of course, John Elkann denied all of these accusations. And then said that it's not a problem for him. Personally, what do you think about the stock today? It's down by a little bit more than 0.5%.
Yeah, it's not a lot, as you can see. And basically what happened with the GM allegation is that it complicated the PSA merger. But today is the day where we are seeing that the merger is still in play, and I think that they're gonna merge, so we are going to see the merge between Peugeot and Fiat, and basically, as yesterday the bad news were against Fiat, today we saw that it's not as bad as it seems, and the PSA deal is still in play. So this is the news for today. So basically, naturally, we know that this deal, the merger between PSA and Fiat and FCA, is something that the market needs, is something that the two companies needs to survive. Yesterday, it seemed that it was a little complicated, but again, today we are seeing great things, and we are seeing that the PSA deal is still in play.
And what do you expect from FCA? I mean, many people are saying that there are going to be further downturns because the stock is not performing really well since the beginning of the year. What is your personal opinion?
Yeah, of course, again, this deal is key. So if they are going to close the deal, the stock will do very well. If they are not closing the deal, they will have problems. But the deal is going to make one of the strongest group on the automotive market, and it's something that it will be a good thing for the FCA stock.
And on the other side, in terms of European stocks, of course, the Fund International is mostly following US stocks, but I mean, it's Friday, so I would like to have a very quick recap of the week. In terms of European stocks, which one, in your opinion, are the stocks to watch?
In terms of the European stocks, I would watch the banking sector because it's been battered a lot during the 2019 for the whole year. So I wanna see something that it's a possibility of, let's say, a recovery in general terms, even if the stocks went up in the very last few sessions. So the financial and banking sector is something that I'm looking forward. And then I also would look at all those stocks that didn't perform until now, because as I say, we have still 1 month until the end of the year, and the stocks that didn't perform up until now could be lifted by the general positivity that we are seeing in the market.
And when you talk about the banking sector, which stock in particular do you mean? Because it's quite surprising.
Yeah, it is, but it's something that I think because it's coming from the positivity that we are seeing in the general market, okay? So it's something like a domino effect, but in a positive way. So being that the general market is going up, even if the financial and banking sector has had problems, I believe that in this very last part of the year, they can go up lifted by the positivity of the market, okay? Nothing more than this. So it's like something like a general positivity that it will be contagious in a positive way and can lift all those stocks that didn't went up until now.
For instance, if we have to talk about a specific stock today as a Friday, ArcelorMittal gained more than 6.5%, actually almost 6.6% on the closure, of course, the Netherlands company, the Dutch company, sorry. Actually, the Luxembourg steel giant, sorry, it's not a Dutch, the Luxembourg steel giant. Personally, what do you think about it? Because it's been particularly good trading session today for the stock.
Yeah, this, in my opinion, this comes from from the positivity that we are seeing on the market, because they are providing commodities in a way and stuff that the industry in general needs. So the reason for this is that, again, the stock is lifted by the positivity that we are seeing in the market and the prospect of more positivity and more upwards trend that we're going to see until the end of the year. This is something that, again, it's something that it's already happening on stocks like this one, but as I said, that we are going to see in more and more sectors that didn't perform up until this moment.
Stefano, I was just saying at the very beginning of the segment that Bitcoin had a major decline, actually 6-month major decline today. And it, of course, had a little bit of something to do with the Chinese central bank, which is also preparing to launch its all cryptocurrency. What is your comment?
Yeah, the comment is that nothing new under the sun, because we saw Bitcoin trying to recover the $10,000 mark. It tried to hold above this level, but it didn't, and it went down below the $9,000 mark. When it broke down the $9,000 marks, it went back to 8,000 and then now to 7,000. So the problem is that Bitcoin is in the middle of nowhere, let's say, because they are not positive, because they try to regain the 10,000, at least the $10,000 mark, and they didn't made it. But it's not as negative as we can think. It's true that it has a big crash, but it's still, with a price of 7,000, that is double the price that it had at the beginning of the year. So it's 100% performance year to date. So it's not as bad as it seems, we can say. The thing is that the Bitcoin and the cryptocurrency sector is something that we are seeing is having big problems, because the Libra project went bad. Then we had the Chinese project. They are saying that they are doing their cryptocurrency, and then we don't know if they are going to do it or not. So the real problem is that we don't know what it's going to be about the cryptocurrency in general, okay? And this is the problem, because when we will know what will happen, and something will happen, so I'm still positive on the cryptocurrency as a whole, we will see Bitcoin regain his position. Again, it's true that it had a big crash, nothing new because it went down below the $9,000 marks, but it is also true that it's hovering around $7,000, and it's double the price of the beginning of the year. So we're having an asset that is doing year to day 100% performance. That is not bad in any term.
So what would you advise all of the investors that are wondering whether to, how can I say, buy the dip?
Yeah, no, I would wait for the $6,000 mark. This is the key. If the market will hold above the $6,000 mark, there is a probability of recover for Bitcoin. So we are still far from that level. But if they're going to lose, if Bitcoin is going to lose the $6,000 mark, we're going to have big problems ahead. So I wouldn't buy the dip, even because the market is going down in a very, very rapid way. So it's like the typical knife that is falling. As we say as trader, you never try to catch a falling knife. I would wait for the $6,000 mark, and the test of this area is super important. If it will hold the $6,000 mark, Bitcoin has a possibility to recover. If it breaks down below the $6,000 mark, it will be a big problem for Bitcoin.
All right, Stefano, let's have for a very, very last topic, the energy market. I want to have a very quick look actually at the oil price. So far, WTI is trading $57 per barrel today. It's down by 0.8%, and the Brent is 0.5% lower, $63 per barrel. Personally, your comment on the crude oil, because it's a very specific moment. We're a few days ahead of the OPEC Plus meeting in December. A few weeks, sorry, not few days. So, it's a crucial moment.
It is, for sure. And I would suggest the investor and traders to keep following the Brent and the price on a daily basis, even if they don't trade the brand, because it's super important, as you say, and we are nearing a very important period in this regard. $60 for the area around $60 it's something that I feel it's a fair price for Brent, because it's not too low and it's not too high. And as we see, even from for instance, the gasoline price, okay, the street gasoline price is staying more or less around the same since some months. So it's not going up and down like the Brent. So this means that the market perceives this as a value area, okay, the fair price for this commodity. So I believe that up until we are going to hover over around this area, the $6 more or less area that we are staying now, this is the fair price for the commodity. Any dip below this level or any run up above this level, around the $60 and the $40 areas, are extremes in this moment, okay? So extreme of negativity, extreme of positivity. So again, I would think about this area as the value price. Starting from this, we can judge what happens on the market, thinking about the amount that the market will go up or will go down in respect to this price.
Very quickly, Stefano, do you think Saudis are happy with these prices? Why I'm asking, because of course Saudi Aramco is getting closer to his IPO.
Yeah, the IPO is another problematic IPO of this 2019. I don't want to talk about something like the WeWork IPO, but it's true that Aramco is facing a lot of problems for this IPO, and this problems wasn't expected. Okay, so as you said, there's no free lunch on Wall Street, let's say. And the prospect for this IPO is really problematic, and in this moment more than ever, okay? So this is something else, and thank you for reminding us about this IPO, because this IPO will be key. The success or not of this IPO will be a strong indicator of what will happen on the oil market in general terms.
Yeah, I mean, that's why actually Saudis were trying to boost prices, and certainly they're going to try to do something in the December meeting, that's for sure. So that's why I was saying it's a key moment for the oil price. Certainly we're going to follow the events. Thank you very much, Stefano Burgiacchi, Direct to SIM, and have a great weekend.
Okay, thank you very much, and talk to you next week.
Well, that was everything from us for this evening. Thanks so much for watching, and see you on Monday exactly at 6:45 p.m. on Le Fonti TV. Stick around.